Thank you everyone for attending our inaugural virtual Fireside Chat series. In light of the current environment, we're excited to kick off this initiative and we hope everyone is staying safe and healthy at this time. For those of you who don't know me, my name is Mal and I'm on the YMP Executive Committee in Vancouver. I'd like to kick things off by thanking our generous and very supportive sponsors, without which these types of events would not be possible. KPMG, Castles, Integra, Varian Mining, Equinox Gold, VRIFY, and Solaris. We'd also like to thank our YMP Global sponsor, Rio Tinto. I'd also like to acknowledge the YMP Vancouver exec team, as without their efforts, this event would not come together. A big thank you to my fellow members, Mike Wooler from KPMG and Jen Poirier from Castles. As we launch into the event, please note that this webinar is provided for information purposes only. This event will be recorded, and while we intend to only have the presenters on video, everyone in attendance has acknowledged by registering that there could be unforeseen circumstances where your image or voice is captured. The structure of today's event will include a 30 to 40-minute discussion between Christian and Tara, followed by a Q&A period. If you'd like to ask questions, please do so using the Q&A function. The chat will also be open for participants to engage in discussion. Lastly, not that I'm an IT expert, but if you do experience any technical difficulties, please try re-entering the webinar. Now on to the event. I'm really excited to have both Tara and Christian involved in our inaugural event, as I've had the pleasure of actually working with them both. They're both driven, some of the smartest individuals I know who have had great success in the mining sector. And importantly, they both have remained very humble about their successes and are both eager to help the younger generation find their footing in this industry. Tara Hassan, who will be moderating the discussion, is currently the Director of Mining Content and Strategy at VRIFY. Prior to joining VRIFY, she was a mining equity research analyst focused on gold developers and producers. She covered hundreds of companies across the sector during her nearly 15 years as a research analyst and has a keen insight into what has made and broken companies in this sector. She also has a keen sense of what investors look for, with her research having been distributed globally. I was lucky enough to meet Tara at the start of my career at NBF, where she demonstrated her eagerness to mentor her peers, including myself. Her skills and knowledge are underpinned by her technical background, as she worked as a mining engineer prior to moving over to the finance side of the industry. Now on to our guest speaker, Christian Milau, CEO of Equinox Gold. He has led the company since August 2016. From its inception as a single asset gold development stage company, then known as Luna Gold, through 3 mergers and an asset acquisition to become a multi-billion, multi-mine gold producer. This is an incredible achievement in a very short period of time. Prior to joining Equinox, Christian was the CEO of True Gold Mining, which was acquired by Endeavour Mining in April of 2016. I had the pleasure of working with Christian at True Gold and was able to witness his incredible leadership. He truly values building a strong team culture. Christian has over 20 years of experience in the mining sector and has held senior positions at Endeavour Mining, New Gold, BNP Paribas in London, and Deloitte. He also currently serves as a director for both Northern Dynasty and Plateau Energy Metals. We are really excited to have Christian with us today to share his perspectives and some insight into his successes to date. So with that note, I will pass it off to Tara and Christian.
Thanks so much, Mel.
Thanks, Mel.
I would like to thank YMP Vancouver before we kicked off for inviting me to moderate, and obviously Christian for taking the time. Christian has highlighted that usually these things are done in person with a beer, so we have chosen to have some beer, and if you want to join us, that might end your Thursday well. So I'd like to spend some time touching on what you've learned in your career and what the YMP members can take away from unusual times like we're in right now. I mean, I think we'd be remiss to not talk about what you're going through now with the challenge with COVID. So can we just talk first on, what we've seen over the last 2 months is a pretty evolving situation and how you and your team have managed to mitigate risk in what is sometimes a limited information and also a changing information environment.
Yeah, thanks, Tara. I was just going to make a couple little comments before that. I was thinking back from, I think it was 2008 at the end of the year. And I remember attending a YMP event, and it was, I think, at Gotham in the basement. And I think it was Don Lindsay speaking from Tech, and they just bought Fording Coal for 14 billion in cash and debt, and they were struggling when the copper price went from $4 to $1. And I remember him sitting there going, I am going to do everything I can to resurrect this company, to save it. Trust me. And I remember his share price was $3.65. It had fallen from whatever, $30. Next thing you know, in weeks' time, I think in a few weeks' time, it was back up to $36, and he'd solved the problems in a sense from the short-term perspective. And that evening, I remember he left at 7 o'clock with a piece of cake because he said he had to go and see his daughters, and I think he was a single father at the time. And I was always very impressed with that. And we kind of are living in this strangely, eerily similar environment with COVID at the moment. And Tara, I think I met you actually my first trip to Africa, and you were covering us for many years in all the companies. So you actually know us pretty well as a group, and there's a bunch of people that you know in our organization. And in a sense, at this point in time, it's very interesting, you know, putting together good people that have been through challenges and crises and cycles and all that together. And I think, you know, we put together this company over the last few years, and probably the group of people, you know, we worked together during Ebola in Africa. We worked together during coups, during ash clouds, during all these crises. And it's funny how you adapt to stress and change. And some of the procedures and the ways of acting are very similar in these environments. And for us, you know, communications, crisis management planning, just talking to your leadership around the world at various sites and sort of managing through. And for us in this environment, it's been very interesting because Ebola had a lot of similarities. It's a virus, very infectious, and you know, it's very acute in the regions you work in. And we've been reacting in a similar way, putting in place protocols and all that. And, you know, at the management level in Vancouver, you know, having to step back, and it's very strange. Obviously, the background in my office here is not the usual space. And you learn how to use technology and tools like this to communicate. And it's made it, actually, we've learned a lot about each other during this environment.
Mm-hmm. And how are you choosing to sort of engage with your team at site? I mean, you're now a multi-asset, multi-country operator. How are you choosing to stay engaged and ensure that, you know, everyone's happy, healthy, safe, and feeling supported during this time?
Yeah, it was a little bit daunting. You know, we just closed the merger with Leagold and us March 10th, and we're like, oh, we have to integrate and we have to deal with this crisis with people that not everyone knows within the organization. One of the fortunate benefits was the COO, Atiru, myself, and all the country heads that all worked together at Endeavour Mining before. So in a sense, had a certain level of comfort. But part of it is actually just regular communications. Part of it's written. Part of it is getting on regular calls, sharing ideas between the different sites. We do weekly calls with a corporate management team, but also with country heads. And we share good presentations, ideas, and ways of engaging with the communities and health services and clinics and governments in each of the regions. But for me, it's funny, you do all this crisis management planning, you can do scenarios, and we were actually just in the process of actually updating ours and doing some practice scenarios on, you know, various events happening. We never would have picked this kind of event for sure from a practice perspective, but it's all about communication. At the end of the day, if you're talking to each other, actually, there's not one individual who solves these problems or knows the answers. Actually, you work through it together, and you have to have a leadership group that's comfortable with each other and willing to challenge each other and speak up.
Mm-hmm. And you touched on sort of your experience in Africa, and obviously, I think that's kind of viewed as one of the more challenging jurisdictions to operate. So you're, you know, well skilled in being nimble and responding to situations. What would you say? I know it's early on in this situation. You've touched on communication. Do you think there's any other things that you'll take away from this specific situation as a lesson learned for the next time we might come across? So, you know, you mentioned like the Don Lindsay experience of like an 08, the things you pick up in those moments and that give you confidence to make big decisions in tough times, you know, the next part of the cycle.
Yeah, it kind of links back to communication again into a certain way, but also making sure you have good backers behind your business, I think is important. And you learn a lot about your shareholders and the people who put the money into your business, being the banking group that's backing us, as well as the shareholders. And, you know, having Ross Beatty, having Richard Wark, having Lucas Lundin, and Mubadala, which is the Sovereign Wealth Fund of Abu Dhabi, who are ultra long-term investors, really changes their perspective. And they kind of look at these crises as, you know, they're a blip, they're a moment in time that hopefully eventually will seem like a very short period in time in the history. And so having that relationship built and strong with a long-term common vision, mm-hmm. because, you know, you can find some people are thinking short-term and why don't we react to things? in the short term, where I've had none of that kind of reaction from our key supporters. Ross has, seen so many crises and things over the years too. He's very patient in that sense. And our banking group, we just put in place, global banks that we drew the rest of our revolver to have lots of cash in our balance sheet. It's the most prudent thing to do. And we called them up and said, hey, we're going to draw the rest of the loan. What do you guys think? And they said, you know what? That's what it's there for.
Mm-hmm.
It's there to be available. So I think it's again, working with your supporting groups and networks that hopefully you've built long-term relationships that are already there before you go into crisis.
Mm-hmm. All right, let's talk about you then. I think a lot of people listening will probably be interested to know sort of what got you into mining and what's kept you into mining, and what sort of maybe one or two of your most enjoyable moments in the sector, and why those meant a lot to you.
Yeah. It's funny when I step back a little further, which has some commonality, I'm sure, with some people in the group, was I was a chartered accountant in Vancouver, went to UBC, I got my degree, and then I was like, okay, I need to go see the world and learn a language or experience some other cultures and work environments. So I went to Switzerland. It was the center of Europe, could learn a language and travel. And I got some more experience there, and then ended up in London because I thought all the transactions, the banking, the activity was out of London for Europe. And I ended up as an investment banker there for, was it almost 6-7 years, probably a little bit too long actually at the end of the day. But learned lots of skills about valuing businesses, the markets, all that kind of thing, meeting lots of different groups and learning how to lend money. And after I left there, I think my wife had her first child, and she was working in London too. And she's a KPMG chartered accountant. And we quit our jobs and we said, all right, what are we going to do with our lives? Let's go back to Vancouver, which is home. And once I got back here, I thought, what am I going to do with myself? This is not a banking city. There's a few banking jobs, but there's not a lot here like London. And I ended up joining a little private company to start, and I worked out of my basement. I was so lonely, which is, I guess, a bit like today.
Kids to keep company.
I just couldn't do it. And I had to get back in the environment. So I got involved with a few transactions in that. And I ended up working, I went back to Deloitte. And I ended up helping on the integration of the three-way merger to create New Gold.
Mm-hmm.
And I remember sitting in their office for 10 weeks straight, helping to figure out how to communicate, how to fit things together, how to create new this and that, new models. And I really enjoyed the people and the environment. And then I was hanging around there, and Ian Telford come in, there'd be Pierre Lassonde on the board, Bob Gallagher, some of these industry leaders that I kind of was looking up to that didn't know, and they were very approachable and friendly. And I thought, you know what, this could be a pretty fun place to work. And I kind of just felt right about the environment, and I really liked the people. So I jumped in and really have never looked back since then. Mining is just such a diverse industry. I mean, there's nothing like it in this, that I've come across, that you go places that you get paid to go to in the middle of the jungle or in the middle of Africa, and you meet people from all different cultures and backgrounds, and you deal with a lot of challenges, but the exposure and board meetings to people like Ian Telfer and Pierre Lassonde, who, have done amazing things many, many years ahead of all of us. And for me, I just got the bug and just really enjoyed it, and ended up getting a tap on the shoulder one day. I remember I moved to Toronto to work beside Randall Oliphant, who used to be the CEO of Barrick. And I thought, oh, it's a great opportunity. I can work with him, learn about the business. And I think it was the chairman of Deloitte's actually reached out to me and said, I've got 2 job opportunities for you. One is you take the CFO role in this company, but you can never travel to the US while you're working there. And I said, oh, that's kind of odd. He says, it'll be in Cuba. It was Sherritt actually at the time. And I thought, oh, that's a bit tough. And then he said, the other one is you move to Monaco. Yeah. And they own an investment bank, and they're actually building a gold mining company in Africa. And I thought, that sounds really, really interesting. It's minus 20 degrees in Toronto. It was plus 20 degrees in Monaco. And I said to my wife, what do you think? And she's from Vancouver. She said, I'm in. So we moved to Monaco on a bit of a flyer, and it was Neil Woodyer and Frank Justra building Endeavour Mining. And, again, just amazing experience. I mean, living in Monaco, and my kids spent the first few years, it was a very strange environment. But we built a business in West Africa. It had 4 mines and a big project. And, we went through the gold price fall from 1900 down to whatever it was, 1300. And building a business in that environment was extremely stressful and hard. I remember waking up some nights going, whoa, am I going to survive this? And then, we made it through everything, and it's a great business, $2.5 billion company now that's been handed off to Sebastian and the team and Naguib Sawiris. And, we're pretty proud of that. And I just learned a lot about, how to do things dealing with African governments, having to sit there and negotiate mining conventions and how to build mines in remote places like that. And it was just really, every time I got off the plane in Africa, I was just felt alive, and it was just so much fun. And now we're doing kind of the similar thing, but in the Americas with Equinox, and it's just a different world. The gold price is going up. What a joy. It's just such a different world. And when we started doing this, Greg, I know, is on this call, and Oda and that, but we sat there with Ross when gold was 1180. I still remember it. We were buying mesquite off New Gold, where I used to work. And we were paying $150 million. We used $120 million in debt. And that was 2 years ago almost now. And I remember looking, I was like, boy, Greg, if gold falls to $1,100 or $1,000, it's going to get very interesting. And we bought it, and now gold's $1,700 and the thing's kicking out cash. And Ross said to us, don't worry about that. I've got your back. I've got the business, I've got $500 million in liquidity to help support building this business. Let's go. And, it's just given us the confidence to do things. And that's been the fun part, experiencing the different places and things, but then the people. And it's usually about these special people that I've sort of tended to follow now. And as I think Mal said earlier, I prefer to be the humble guy that people don't know. And Ross will be the face of the company. And if we do something successful and he takes all the credit, I'm more than happy.
It's interesting because you touched on earlier. I've been lucky to know you for, I think, over a decade now from my time in the analyst chair. And I know we've had lots of conversations over the years of sort of you standing out as someone who goes against the grain, sometimes makes decisions ahead of the curve that might not be popular at the time. So, doing stuff like taking Luna and doing, multiple transactions in a tough environment, doing lots of dilution, but coming out the other end of it with such a successful story. Can you talk about sort of what gives you that confidence to move, not only make the decision, but then kind of stick with it, even if you're kind of hearing negative stuff from investors or like you said, worries about the gold price and those kind of things that kind of push you through those moments?
Some of it's, I'm going to call it a little bit of blind luck. I'm going to step back to even True Gold. When I left Endeavor Mining, I got a tap on the shoulder and said, do you want to move from CFO to be CEO of a company? It's back in Vancouver, working with Mark O'Day, Nolan Watson, and some good figures in our industry here in Vancouver. And I thought, again, a great opportunity to enhance my career, to actually work with some people who've been very successful. And boy, if I knew what I was walking into there, maybe I wouldn't have done it. So sometimes kind of backing yourself, looking at a situation, assessing the risk. And I think, having come from the accounting background, sometimes it's hard to assess risk, I think, because you're used to working in absolutes, sometimes absolute numbers, where sometimes you only have 50, 60, 70, 80% of the information, and you have to back yourself or back some situation and say, I can fix this. I've got the determination and the long-term vision and view, or the backers to give you that time. And I think that was what happened at True Gold. And the same sort of happened here, where when we came in, actually Greg was on the board at the time. Pacific Road Private Equity was the 50% shareholder, and the other 50% was kind of loosely held amongst other institutions in the industry. And, again, they had a longer term vision at the time, and you felt you had the backing. But I also think you got to choose in life to take some risks, and whether it be with your career or with a role. Also, I believe if you put a bit of your own money and skin in the game, which I always have in each of these roles, you're more committed as well. You can't just give up on things. I've put, a couple $1 million into this story, and I put $1 million in on day one, and that company had $3 million in the bank, I think, and us and the management team put 2.5 in. Now, again, when I look back, I go, what were we thinking? But I did love the asset. It was in the middle of Brazil. It was unloved. Everyone thought they should give up on it. So the valuation was, call it, reasonable. And it had Sandstorm and Pacific Road behind it. And so we thought, you know what, we can solve issues where you can bring in money, people, time, fixes that are possible. The rocks are solid. They're good. You can turn around a mine if the actual gold's there. And so in a sense, we'd done a few things like that before, and we had the conviction in the team. And again, it's a team. There's 5 of us who joined, and it's still the core crews here at Equinox Gold, with a few new members, obviously part of the team. And we just had the background to take that risk. But it does take some nerve. And my view on young people in this industry who want to, build their careers or build their portfolio, both of those you have to take a bit of risk. And sometimes you have to be willing to say, if it doesn't work out, okay, it could be a little knock on my career, but if it works out, boy, it could be really good for my career, or vice versa. I'm going to invest in this thing. And if it doesn't work out, okay, I'm willing to lose the money because this is a risky business. But if it works out, boy, it could be really good too. And so I think getting comforted with that. And whenever we hire people, we always ask them, this is not a 9-to-5 industry or job, like this is a changing environment and we're going to be a growing company. And so in a way you build, and that's the number one focus I spend my time on. I think I'm head of HR actually more than anything, is hiring people who really are excited to be part of that and who have a similar vision and excitement about what we're doing.
I'm going to weave in a question from the audience that's sort of relevant to what we're talking about. What's an example of one opportunity that you didn't take that you wish in hindsight you had taken?
In terms of my career, it's probably worked out for the best that I didn't, but I remember when I was in Switzerland, I actually got recruited to move to Moscow to be a senior person in Deloitte at the time there. And they were just building up the partnership. And I knew the head partner there who moved from Vancouver, interestingly. It was Dan Koch at the time, and he moved there. And I remember he took myself and my wife there. We spent a weekend there in this beautiful hotel in front of the Kremlin, got nice personal tours around Moscow. They took us to the office, and it was an office of, I think, 30 or 40 people, literally within 100 yards of the Kremlin. So the most beautiful part of Moscow. And he said, we're going to build a business here. The wall had just come down in early 90s, and this was late 90s when things were just starting to boom. Obviously, Russia was fairly risky. And I just at the end, my wife interviewed, we got the job offers, and she said, I just don't feel comfortable. And I thought, you know what, maybe it's just not worth that risk. Mm-hmm. And if I had done it, because 2 other guys from Vancouver who were at this equivalent level took that opportunity, they became partners very quickly. The office grew from 40 people to 7,000 people in a few years. And they aren't retired, but they're close enough to it. But they became very senior partners in this business that just grew like crazy. And it was a fascinating time. It wasn't easy, but it was a fascinating time. So I kind of go, what could have been if I'd gone there? Because I would have been going to Almaty in Kazakhstan. I would have been going to all these parts of Siberia, and it just would have been fascinating. But I wouldn't trade kind of where I am now, but I always kind of wonder what it would have been like.
Yeah, that's sliding doors.
Yep. And that's the other thing. I've always, you touched on a point there. It's interesting. I always believe that you should back yourself and take a risk. And I'd rather take a risk and regret having taken it than not taking any at all and then go, I wish I'd tried something out.
Yeah, for sure. Yeah, I'd be in full agreement with that. And I think, the interesting part about this business is, like when you go touch back on people and communication and how important those things are. I mean, I think, good people with good talent and have a good network, there's so many opportunities to change it up and do different things. So, taking those risks are important because there's always going to be something else if you have that little stumble, I think.
But it doesn't make it easier each time. Like when we sold True Gold and I had no job for 4 months, I was nervous as heck that no one would ever call me again and never get a job. And, maybe that's part of the working hard and being fearful always of a business failing or your career failing, that you just keep working hard and on the treadmill in a certain sense. But
I think one of the things that most people would love to hear about, given how busy you've been, is your M&A experience. And obviously with Equinox, you've been incredibly busy, most recently closing the Untitled merger. So if we can just maybe touch on that. Obviously that, kind of brought together some people that you knew from before, and created a pretty amazing company in a short time frame. So sort of some lessons learned, background on the transaction, and then we'll talk a bit more about other stuff you've learned through multitude of M&A transactions you've been involved in.
Yeah, I was actually just going to touch on something I learned on M&A I learned a lot of the theoretical stuff from the investment banking, how to value companies, how to do discount cash flow, how to, look at the market perspective. But then reality is quite different. And at Endeavor, it was very interesting because Neil was very deal oriented at the time. And we did a number of deals there to create that company. And I learned a heck of a lot from that and financings. But at times I felt that on occasion we weren't always clear. At that time, we were brand new to the gold industry in a sense, and Neil had gone from being an advisor to being an actual operator. Mm-hmm. And on occasion we weren't as clear that our long-term vision was to acquire and build and to do this. And it was in a falling gold environment. So we've sometimes got criticized because we'd do a deal, we'd start betting it down, then a year later a deal would come and a couple of shareholders were like, well, we weren't expecting that. Mm-hmm. Where I found one of the really interesting differences is, I think, with Ross over the last 2.5 years and Greg, who's been absolutely integral part of creating this company, we were very clear from day one that we are going to do acquisitions in the low point of the gold cycle. We have good backers who have access to capital, and we will be unabashedly building a company through M&A. And I think we've built a shareholder base that actually supports that strategy. And we've been very clear. We've been clear. We're not paying dividends right now. We're a growth company. In 3 to 5 years, when we're steady state, I think, yeah, we should be paying dividends. But we've been rewarded for our strategy in a sense, because I think also something I've learned from Ross is you have to have ultimate conviction and look through the quarters and actually look at the next 3 to 5 years. And I remember, and this drives Greg crazy on occasion, but we've built these, I call it 5-year plans, which they have blue sky in them. They have a bit of, I'm going to call it the fantasy part of our dream that we want to build something. And I remember, I think it was maybe 2 years ago, Greg was fighting through this plan and proposal to present to a group like Hubatl and saying, we're going to become a 1 million ounce producer. I remember sitting there going, boy, man, that's a long way off. When are we going to do that? Yeah. And we were a single asset developer looking to buy one producing asset, and we developed that plan. And it doesn't look exactly like that today now that we're heading towards 1 million ounces. But I'll tell you, if we hadn't had that vision to say we're going to aggressively go after it, we probably wouldn't be where we are. And so Ross has given us the confidence to do it. But I think people like Greg and Jim Curry and Peter Hardy and now Atty and the Endeavor guys who are part of the team, and Ota's here, and it's allowed us to actually continue doing it, because you also have a common group of people coming into the organization as part of new management that actually have built companies as well. Yeah, for sure. No, I mean, I think at the time when you guys have, like you said, you've been so honest about and upfront about, this is our goal, this is our strategy. And that doesn't always sit well with investors at the time because they just hear dilution. But I think you'd get a lot of credit for people because you're not doing those surprise transactions. And when you have done these deals, they've been well thought out and charted you towards that growth plan that makes sense. And some of that's an evolving strategy and story. Like, in the early days, Greg and I would spend a bunch of time looking at West African assets. A bunch of the team had spent a lot of years in West Africa. We knew the assets well. We thought they were undervalued, but we clearly got the Americas strategy. And so you do have to refine it over time, and our shareholders reward us for being Americas focused now. And, I wouldn't say everything was perfect in the deals we did, but when we did do the deals, particularly when like Mesquite was probably the first bigger one that we did. We did a few earlier ones, but that one we went in fully financed, made an offer. Ross and Richard Wark underwrote all the equity, and Scotiabank and a couple of other banks actually stepped up for all the debt. And so we actually had those capital backers when we were a small company that were basically backing us as though we were a larger company and providing the capital at better cost of capital. And part of that is because of Ross's history and background and sticking behind names and having created value over time that attracted that capital. And then we helped execute on it. And we really haven't looked back since then. It's continued to move forward. It's not been easy, and there will be challenges, but I think, we felt the gold price was low. It's going to go higher. I never would have guessed we would be sitting in 1,700 gold today, and trillions of dollars would be printed right now, and zero interest rates again, and a negative yielding debt all over the world and stuff. It's an incredible environment for gold. So, we even got luckier in a sense. We were building this business for probably 2 or 3 years from now when we thought gold might turn, but it's already starting. Yeah. Luck and timing is definitely a big part of this business. So, touching on that and sort of being surprised by this new environment, do you think it provides any opportunities for you to continue to deliver on that growth strategy, and or do you see any challenges with the current environment to chart that path? Yeah, so we have 6 producing assets, and we have 4, I'd call them growth or development expansion assets. So we have a lot to do internally, and so I'd say our current focus is on executing on the internal growth. But in this environment, I tell you, Greg and Ross and I were sitting there last week kind of going, boy, this is an interesting environment, because if there is a lack of access to capital, or valuations are distorted, or companies need to be part of a portfolio, we need to be opportunistic again. It might be a little bit early days, but if you don't start looking again or paying attention to the market, you won't be ready. And so we will keep our eyes open, but we're not as aggressively trying to grow at the moment. And we'll do something if it makes a lot of sense to enhance the portfolio or asset quality over time here. Okay. I think you just came off participation in the World Gold Forum, which was kind of the first big foray into like a virtual conference. Yeah. How do you think investors are feeling, and what are your takeaways from those conversations in terms of what the setup is for the precious metals? Yeah, well, just from an actual conference perspective, it was very interesting because it was the first all video conference. So I'd be up at 5 a.m. and the Zurich investors would be finishing their day off, but you'd be talking to investors all over the world. It worked really well. And it does show us now going forward that actually marketing and doing things from a remote location is actually very viable and doable, especially if you've met people before and you have a good personal relationship. And, we did have lots of conversations with investors, and we're seeing the generalists saying we're totally underallocated to gold. We're seeing the guys who are been interested in gold going, boy, it's getting really interesting now. And people like Ross going, this is the best setup for gold he's seen in 40 years in his career. And there is definitely a building interest and buzz, but it still doesn't feel to me that people are piling into the equities yet. You've seen the big companies like the Barricks, Kinross's, Newmonts, et cetera, getting a lot of liquidity and support, and valuations gone up. And then you're starting to see it filter down into the multi-asset mid-tiers. And I'd say we've been probably benefiting from that. Our volume's been $20 to $50 million a day, which used to be $1 million a day of trading. And we're just starting to benefit from that. But I think those bigger funds are just starting to allocate their capital into the mid-tier space. But the generalists are going, I need some access to gold. And they're starting out with the GDX, GDXJ, or bullion, and some of the simple products, or the big Franco-Nevadas or Barricks or Newmonts. But now they need to look for a bit more of, I guess you call it alpha, but some more torque in their portfolio. And one of the challenges, though, I noticed, like one of the New York funds the other day said he's got $7 billion under management. And he said, I'd love to buy more gold. But he said, I've also got 4 airlines and 4 oil companies that have just really obliterated his portfolio in the last few months. So they've also got that challenge. So I think they also need to have a little more visibility through this period of uncertainty here with COVID. And, I'm reasonably optimistic here that humankind is smart. They'll figure out a way to live with it, but also get a solution. And then ideally in the second half of this year, we start to see the light at the end of the tunnel, and you'll see a bit more interest in gold, because people will wake up and go, we cannot print $2 trillion at a whim and expect, the currency not to get devalued in the US. And that's just the first example. Most countries around the world have done the same thing, and we're all at 0 interest rates again. So I think some point here that reality will hit home, and they'll keep coming back into the sector.
Yeah, let's hope so, because it would be, I know, having been an equity analyst for the last 13 years, 10 of which were pretty terrible years to be in the gold space. It was kind of always the coveted thing we were all waiting for, was, that time when they come back. But, I think if you look at how few opportunities there are in other sectors, I think the setup for generalists to come back is certainly better than anything I've seen.
And I've always said to people that are in our industry, whether they're working on our side or your side in a sense, and some other areas, is try not to give up on the sector when things are really tough, because that's when things start to turn. It needs to feel really weak. People give up, and that's when you get invested, or you get a good career position or an opportunity, and then you see the upturn. All I know is that we're so cyclical. We know the sector is going to pick up again, and it seems to be at the moment.
I'm going to weave in a question from the audience, which is, how have you found the experience during COVID differs from your past sort of, moments like the coup or stuff that was happening in Burkina, given that we've seen these advances in technology?
It's definitely been a little easier in a sense, because I have found people have embraced the technology better and are very good with it. And I found the communication channels have been better. Just as simple as internet connections are better. I remember certain sites in Africa, just it would always be going down, or you'd have trouble, and communication was more sporadic, where right now it's very real time. Like we have calls with people like Atis and Joburg sometimes, and then you have people in Brazil, and then you have us here in Vancouver, and it feels like you're all in the same room almost. So with these video conferences and things, it's become very, very easy in that sense. And I found that the initial part of this crisis was pretty stressful. I think we had our crisis calls almost daily, and you had every morning you'd wake up, look at your emails and go, okay, what's changed overnight? Which countries reacted this way? Which site has had an impact? Which other peers had a change in their plans that you had to monitor and be careful to, be understanding. And then you had a lot of people telling you to look after people and shut down all your mines. And, also you have to manage a business through this environment too. The health and safety is absolutely paramount, but also you have a business to manage. And I found the African stuff had more uncertainty in a certain sense, that There's a lot of unpredictability, where I think we're getting to that point here where there's a little bit more stability in what we're doing, and we're getting a better understanding of it, where a few of the things at Endeavor were more uncertain. So in a way, it set me up to be more prepared for the uncertainty. And I think we're getting to a point where that uncertainty is not as bad as it used to be.
Yeah, and I think, you know, probably a lot of the challenges that you would have dealt with in your career when it came to running stuff in West Africa is like there was a small group that was in the same boat, whereas now it's kind of everyone's in the
Global.
same. It's you know, we're all kind of dealing with adjusting to this together, and I think that has created a lot more openness to you know, do virtual stuff like this. So it'll be interesting to me to see how that carries forward.
I've been extremely impressed with investors' patience.
Yeah.
When I talk to them, some of them are like, you know, just well done, keep it up. The gold's still in the ground, even if you can't mine for a month or two. They're going to see through it. And I've seen that's been the really exciting part to see here is they're not penalizing us for this month's, you know, lack of gold being produced in Mexico because we're shut down because of government regulation. And that's kind of new for me at the moment. In the past, you've seen them kind of penalize anyone for any hiccups. And I guess they recognize it's not all our fault in a certain sense, because you have to adapt to government regulations.
All right, we're almost done with our time, and then I'm going to get into some of the Q&A. Oh no, you have lots of time, just the Q&A. Okay. But before we kind of stop our formal portion, what advice would you give to YMP members during this uncertain time? I mean, you touched on, you know, not giving up on the sector, but are there things that you think people should be looking for, whether that's career-wise or investing-wise, that should be things that they take away from the situation?
Yeah, I mean, I kind of touched on it earlier with career-wise is, you know, find a good opportunity that you're engaged in, enjoy, and really get stuck in and give it all the effort right now, because I think it will turn and be really rewarding as things do get better. And, you know, there's a bit of decoupling here in resources because you have the base metals at the moment and precious metals, and they're slightly different. But generally in the sector, if you get yourself well positioned, you know, career-wise, learn lots from different people and be a sponge in a sense. And I think, you know, work hard in a sense and find good people to follow through these difficult times, because it builds that confidence. You know, even if we're having a bad day, some days you give Ross a call and he's the ultimate optimist, and, you know, following an individual like that who has the pocketbook to support the company, but also has the optimism and vision as well is great. And I think you can find lots of great people, not just in the mining part of the industry, but service providers and all the groups around it, banks as well. They have their own approach. Some give up at the bottom of the cycle and just let go of their whole teams, and others actually start doubling down. I've seen a few Vancouver boutiques start to increase their teams, and I think those ones will be very successful as they come out of this cycle. So finding that right place to be with a very supportive leadership, I think.
I think when we talked earlier this week, Christian, you touched on sort of the lack of talent sort of in key age ranges. Like, how should younger people in this business position themselves to take advantage of some of those gaps of knowledge and skills?
Actually, that's a great point. Yeah, I think there's going to be a lack of talent as we move through this next 5 to 10 years. And I do look at a lot of people that I look up to, kind of mentors, or I'm 48, or 49 actually a few days ago. And, you know, a lot of people that are ahead of us are in call it that 60 to 65 range or just above, and kind of maybe last cycle, and then they retire. So a lot of those skills may not be as accessible for an executive type role or a management role. And I think there's a gap down to a certain age group that they don't have the experience because there just haven't been enough engineers coming through or people in the industry getting exposure. And I think there's a great opportunity. I look at that as, it's a little bit of a worry for me because I got to hire those people, and there may be a scarcity of talent, which is great for people because obviously wages go up when there's a scarcity, but there's a chance to get outsized experiences, because if you're a good person with experience at a younger age, you're going to be the next person on that totem pole to get the tap to take on sort of more senior roles. And so I think it's a great time to be getting that right now. And as this cycle turns, you'll continue to get experience. And as people retire, there will be more and more opportunity for young people. You were asking about investments there too. And again, investments is a tough one. I'm not a great investor at times when I just invest my own money. I have a lot of money in resources, and I have a little bit that I give to my brother who only buys like RBC and conservative stocks, which I don't worry about. And I put most of it in the stocks I'm involved in, because I find that if I'm an insider on the 3 companies I'm involved in, I can't sell my stock when my emotion's hitting me.
Yeah.
And I'm just forced as an insider to hold, because obviously when I'm selling, I get calls from investors going, why are you selling your stock? And so all I do is buy more. and usually the only time I've been seller is when I've sold a company or I've moved on from a role like New Gold to Endeavor, or Endeavor to True Gold, or True Gold being sold to Endeavor. And I found that those have actually been my most successful investments, where you put your heart into it and your money's sort of locked into something that you can't on emotion sell.
Yeah.
And back yourself or back the people you trust and know. And you get a lot of calls from brokers with a cheap unit financing in Vancouver. And if you don't know the people, I found most of the time it doesn't work out. So be careful on the people.
We actually have a question from the audience that sort of relates to what you were just touching on for your investments, which is it both, I guess, personally in your investment accounts and also as a CEO, how do you resist the temptation to react to negative fluctuations in gold prices?
Like resist the temptation to sell or to buy? Probably sell, but yeah. I mean, it's interesting. Greg and I on occasion have these conversations. Like, was it a few weeks ago when the market started to fall, all the gold stocks, the GDX and all that fell pretty hard in a similar timeline. And we were looking at some of our peer companies going, wow, Sandstorm, we know Nolan well, and a few other companies going, wow, they're at 50% off of the, they're on sale today. And they've fallen like 30-40% over the last few days. You just go, this doesn't make any sense. The business hasn't changed. Fundamentally, it's actually getting stronger with the gold price and the environment we're in. So again, sometimes it's actually standing back and listening to the Warren Buffetts and saying, buy when there's blood in the streets. And it's so hard to do. It's easy to say, but when you see red on that screen, you're looking at stock price and they're falling, it is so hard to call a broker and say, put money in, because when you see things falling, it feels like it's just going to keep going that way. And sometimes it does. Mm-hmm. But if you have that conviction and you actually understand the business well enough, you can take that risk or bet in a sense. And I think I'm getting a little better at that. And so I have some of those investments, but most of mine, again, is in Northern Dynasty, Plateau, and mostly in Equinox. And again, it keeps me safe by being in a company I'm in that I can't sell on emotion.
So everyone needs to invest heavily in their companies is the advice from Christian.
Yeah, and there's the other side of that, actually, it's a good point too, is you look at the Enrons of this world that went bankrupt and everyone had all their money in their 401ks and everything, and lost everything. So you do need to have some diversity too. Yeah.
All right, we're going to jump into more questions. So we've got a question from George Jarling, who is my first boss in the business. It's mining is a small world for everyone out there. Wondering how you think mining will look as we come out of this.
How mining will look. I mean, I think there is a little bit of an opportunity to think a little bit differently here. And certainly from our corporate office perspective, when we go back to work and that, we're going to go, okay, we've done things a little differently, we've prepared a little differently, we've operated a little differently. And even things like, do we all need to be in an office together? Mm-hmm. Which isn't necessarily a mining thing, but I think we'll be able to think around that. Do we need smaller office space? Maybe we don't need to pay so much corporate costs for that kind of thing. Some people work better at home. So we'll think a little differently around that. I think you'll see we're not going to go back to normal out of this COVID crisis, where you'll have different protocols, procedures for travel, for going into countries, for going to mine sites, and distancing and certain tests like heat tests. And, some of our sites will have masks and that, so it'll be slightly different. I think technology like remote underground mining, which I know a group particularly I know reasonably well is Resolute in West Africa, use it from, I think, Perth, Australia. They run their underground trucks in Mali in West Africa. Maybe we should be thinking a little bit more about that kind of technology, where it does, technically protect people a bit more, but it's also allows you to do things a bit more remotely and not get hit by these issues. Mm-hmm. On the other side of it is, it's not necessarily this crisis, but we as an industry, and Ross is very much behind this, is looking at renewable energy sources, looking at driverless trucks, looking at solar power in California for us. On one hand, there's a bit more of a drive towards that, irrespective of this issue. But on the other hand, too, now with oil prices falling so much, is those diesel costs and various things are becoming way more competitive versus some of this alternative energy sources. So it'll be interesting to see where that all settles and the dust settles on that front. We almost put in some solar powered Endeavor in Africa, and remember the diesel price fell off a cliff, and then we were kind of going, it doesn't make economic sense. How can we justify to shareholders we're going to pay a lot more for this solar power right now? So I think it is making us open our minds a little more to new technologies and ways of doing business, but I don't think it'll be a revolutionary change. I think it'll be evolution over a period of time.
Yeah.
I certainly opened my mind to doing things a little bit more differently going forward.
Mm-hmm. I mean, mine is not traditionally known as revolutionary.
No, it's not.
Businesses. I mean, I know going back to when I worked with George at Inco, I mean, you know, that's a group that was into automation, you know, years and years before anyone else, and really just never picked up. So I do think your point is interesting. Will this be the moment where people start to think like, hey, there are some other opportunities, and we've come so far in technology and the ability to be connected that some of those things seem easier now than they did 10 or 20 years ago.
One of the interesting things coming out of this that I really don't know is, for the last year or two, there's been a huge focus on ESG, so environment, social governance, you know, those areas, and certain funds and investors won't even touch a stock if they don't have a rating in that area, or if they don't have a strong policy, as particularly of a company our size now. And I know European funds would say it's an absolute criteria we don't invest. I think North Americans are moving that way. But it'll be interesting to see in this environment where there's so much crisis, job losses, and that, will people pull back a little bit from that focus, or will they continue with that focus? And that's something I'm actually curiously watching and I'm going to have a keen interest on as we come out of this, because we've changed our focus now as a multi-asset, bigger companies. We need to get up that curve. And I think we do a lot of that stuff well, but we don't communicate it that well to markets. And, you know, it'll be interesting to see if they still ask us those same questions after we come out of this crisis.
All right, another question from the audience. You've talked a lot about the people you work with and the importance of the team. What do you look for, and what do you think is key to building a strong team culture?
I believe really strongly in a few sort of principles, and we have certain values, and I won't go through all those, but certain basic ones, like anyone you come across, whether it's internally or externally, but particularly in a company, you treat people with respect. You treat people the same way you expect to be treated, and doesn't matter what the title is, where they are, what culture, anything like that. And I think that filters through an organization, and people, I think, really appreciate that. And you put people ideally around you in terms of leadership quite often are better than you or smarter than you, who are no technical areas better than you. And you have to be vulnerable. And I've seen there's two styles of leadership that I consider. One is very much kind of dictatorial, autocratic, a little bit of fear, kind of, this is the way it's going to be. I'm the leader and I make decisions ultimately. Or it's a bit more consensus with, you put great people around and you expect them to challenge you. And I tell you, in our office, when we have certain meetings around like our ESG approach or our risk management or something, we have very heated discussions where department heads and people challenge me, they challenge Greg, they challenge the team. And I think it takes a bit of courage to do that. And you can look like not the smartest person in the room in those scenarios. And as a CEO, it's a little bit vulnerable. And, you know, but I actually kind of go, at the end of the day, I look way better when all those great people are around making great decisions, or at least informing decisions I have to get involved in making. And so I found that it takes a lot more work to go that way. Yeah. Because you're managing relationships, you become close to people. I believe you have to like the people you work with. And Ross and I were even talking about it. You want to ideally be able to take people home for dinner and introduce them to your family, but yet have them challenge you at the same time. And that's a real fine line to dance around, and takes a little bit of guts and vulnerability to do. And it's a lot easier just to make decisions and tell people what to do. Takes less time as well. So for me, that's been a really key thing.
Great. Next question from the audience is, without the backing of large long-term investors with respectable names like Ross and Frank, how would you suggest a company message to shareholders that growth through M&A is the right path to take? Most investors still seem gun-shy about M&A and are focused purely on short-term gains rather than transactions.
Boy, that's not easy. It just I'm not sure there's an easy answer to that one. But maybe part of that answer is you've got to go and find a few of those investors. And it may not just be a Ross or a Richard Wark or a Luke Sundin, but it could be a few funds that believe in what you're doing. You know, it might be the Van Ex or the Paulsons or some fund that has a big conviction in gold. And part of it also is that management track record and the people on the team that they'll want to back. So ideally, you know, having done it before, it makes it easier the second time, but you have to start somewhere. So finding and building that trust. And sometimes it's about having conviction, working through things in a challenging way, but having the conviction to actually take that risk and show and prove people that you can do it right that first time, and then you'll get a bit more momentum and clarity for the second one. And it's a bit of a slow snowballing effect, which is, in a way, I think is what we did with Luna in the early days. Is, I would say that we didn't have the backing necessarily to build this company through M&A. It was more to rebuild a mine in Brazil that needed recapitalization, and it wasn't to go build a company necessarily that was going to be multi-asset, million-ounce producer. And we slowly built the confidence in the team that we could do it, had the bandwidth. But I tell you, we had some tough discussions with our key shareholders to convince them of that, and it took that conviction, and we had I'd say, a growing track record of doing that.
All right. We've seen a lot in the media about mining companies contributing to their communities through this crisis. What has Equinox done or considered doing to support communities it operates in, be it financially or otherwise?
Yeah, it's absolutely critical, and we're in some pretty remote places in that. So we have, and I believe this is actually bigger than COVID. I believe it's something that has to be fundamentally part of your business, irrespective of which crisis it is, because there are going to be other ones after this. And having a Ross, who I know through Pan Am has built an incredible culture of supporting communities and that, but also he on a personal level has a very personal commitment to it, as well as he's committed to the environment and animals and that through his charities and foundations. We're in the infancy of, we've been talking about creating a foundation, which would be a totally separate thing, where we put some money in and maybe even Ross contributes to, that will go towards supporting communities and that. And it will be in crises and in non-crisis times. On the other hand, right now, what we're doing is, even with Mubadala, we have some shared experiences in Brazil where they have access to people and skills and supplies that we don't. So we're trying to access things like masks and clinical PPE to provide the clinics with support. We're actually trying to make sure that the local communities feel comfortable through both the way we operate and act, but also contributing to their clinics and their groups that actually don't have access to, some of it's money, but some of it's just supply chains to get certain goods and things that they need to get through this crisis. So we're kind of working closely with them on that kind of area and trying to adapt to each different state or country we're in.
All right. The next question is about sort of a comparison between what you experienced in Toronto, where we see sort of more majors, a bigger mining center, obviously bankers and investors, versus what you're seeing in Vancouver. And do you notice a difference in the mentality between Toronto versus Vancouver, particularly loss of Goldcorp? And how do you see the future of the mining ecosystem in Vancouver?
That's a loaded question, isn't it? Yeah. I've worked in both. I was actually born in Toronto, but basically grew up in Vancouver, and I have a bit of an allegiance to both, but they offer something slightly different. Vancouver is a very nimble, creative, great environment for ideas and people who are entrepreneurs. And it's an exciting place from that perspective. It does have that checkered past and history of sometimes doing things that are not always above board, but it does create some great companies from their infancy here, and people who are willing to back it. Where when I was in Toronto, I found I got a different exposure to more of the more grown up, mature market, in a sense, where the banks tend to be, the lenders are, the analysts are, the bigger companies are. So it was kind of more of a mature environment, and both of them are great in a slightly different way. I do enjoy the small growth phase to something bigger. So I'm kind of enjoying this environment where you can take a single asset or company and create something out of it a little. I find this environment is very conducive to that.
Yeah.
And now with communication technology and travel, it's so easy. It doesn't matter if you're in Vancouver or Toronto, in a sense. You can do it in both cities now, I think, pretty seamlessly. And we're really excited about, or disappointed to see Goldcorp go in many ways, because I think it's such an institution of the city. And we as Equinox now start to get calls from charities and that saying, hey, can you fulfill their shoes or step into their shoes here, because we've lost a big sponsor or supporter of this or that, or various service providers. And we're pretty excited that we think maybe we can. We can't even pretend we're close to Goldcorp these days, but we are much bigger than we were. We're a big growing company in a sense, and we'd love to fill the shoes of a Goldcorp here. And so there's only a few larger mining companies here. So it's an exciting place to actually to be I call it a mid-sized fish in a bigger or a smaller, bigger pond, I guess now.
All right, another question from the audience. Given the current gold price, do you find the lack of development project transaction surprising, or do you see this beginning to turn?
Yeah, it's a bit interesting. I mean, we've certainly taken the view that we could buy producing assets at reasonable prices, and maybe the discount on those development projects isn't high enough. You know, I know Ross loves to say, you take all the risk out of it, because developing an asset, financing and all that is quite risky. And when you can buy a producing asset, you've taken all that element out of it, and you know how it operates. We've been a little cautious in a sense. We haven't seen that valuation gap high enough to start to go down that curve, but I think it will come here. And I think with this upper part of the sector starting to get the bid and get the equity and liquidity, it'll start to pull the top end up a bit more. And I think it'll make the lower end more attractive in terms of development assets and that. I think it's coming. I think it will come. And I think the interesting thing is there's a lack of assets out there that have come through because there hasn't been exploration dollars and access to capital in the smaller end. So I think it will be an exciting place to be in the next few years. And I see just that transaction yesterday, Newcrest buying all the debt and streams or whatever they were, gold prepay instruments of Lundin Gold down in Ecuador, you know, was a pretty interesting way to get exposure to the lack of world-class assets out there. Part of the reason I'm excited, and people have a very, very politically charged view of this, is I'm on the board of Northern Dynasty, and I love it because it's the biggest undeveloped copper and gold asset in the world, and major companies one day should own part of it or all of it. And I kind of look at, you know, good quality early stage assets and kind of go, there will be a lack of growth in our sector because people haven't invested for the last 8 years. Mm-hmm. So it will be a good place to be.
And all right, maybe possibly our last question. We'll see how time goes on your answer. I think the beginning of this question is an understatement. Mining is super tough. You're dealing with commodity prices, geopolitical risk, coups, all of that stuff. How do you deal with criticism from analysts and shareholders who never have experienced the reality of operating a mining company? And the last part, which I relate to, is as a young person in mining, what do I tell my mom about the coups? I know I've had to maybe elaborate a few times on my visits and site visits and what I share with my family. So I think that's something you could shed some advice on.
Yeah, with the investor question, sometimes I have to bite my tongue a little bit because you do get some feedback or some commentary that's, I think, uninformed, but also everyone's entitled to opinion. So I think if you treat those questions with respect and give them an answer, sometimes it's a bit of a tough answer for them to hear. You have to. I mean, I got one example. There's an investor of ours who's in Sweden, and when we would put out our compensation, our equity long-term incentive plans, he would send me an email going, I can't believe you could issue this, you know, you're overpaid, all that in the industry. And I would literally defend my position very, very politely, but say, look, I'm proud of what we've done. I'm in the lower quartile of CEO pay, and look at our results. And you have to sometimes walk people through those steps of thinking and take it down to basics and be really straight up and honest and plain. Sometimes you do have to bite your tongue though, and it is hard, I have to admit. And then in terms of coups and all that stuff, oh boy, that is a tough one. I mean, sometimes when I've never really felt endangered anywhere I've gone. I've gone into places and been escorted when we went back to work at Trudeau by 376 Army and police and all that. And, you know, I just hope that my wife and my mom don't watch the news too much or know where Burkina Faso is. But I do think that the news is always over sensationalizes these issues because it makes for better sales. You know, people like to show the bad news and the big news, but generally on the ground things are not as bad most of the time. And but you know, life's about taking a bit of risk and walking across the street and get hit by a car too. So yeah. I've always taken a bit of a sort of a measured view on it all, and you know, if I'm too afraid to go in, I won't go in.
Yeah. All right, maybe a closing question, which relates to advice you'd give young people. A question from Kai Hoffman, and maybe he's asked this because he has some ideas for you. Would you go on the board of a newly founded company to support a young CEO and support him or her with your experience?
You know, I love that idea. I mean, honestly, some of the questions I've answered today, I haven't said these things publicly before, but I really love working with young people and a young team and the young environment, because honestly, I remember those days, and I remember just going, when I went to some of those interviews with like Mark O'Day or with Neil or with, you know, some of the people at Inaugural, I was like, just give me a chance. I'll show you what I can do. And you need someone to take a chance on you. And it's, I'll be forever grateful to those people. And again, a Ross Beatty as well recently, and you're going to be forever grateful to those people. And someone's got to take a chance on you. And why shouldn't it be me? Because I remember those days. And if there's anything I can lend, sometimes I feel like I've got very little to lend people or experience to give them, but I hope I have learned something, and absolutely would do that. And I think it's a great thing. And I look around our space in Vancouver, and there's a lot of great groups that create that. Like I'm going to use Marcel DeGroot and Dave DeWitt of Pathway Capital. They go and seed and fund companies, John Robbins, other groups that take these assets and can put their backing experience behind younger groups and teams. And absolutely, I think it's a great way to do things.
Awesome. Well, look forward to lots of inbounds in your inbox. But thanks so much, Christian. I think we're out of time. It was great to chat with you. I can't wait till we can do it over in life beers versus
the remote beer. No, thanks very much, Tara. It's a lot of fun. I'm amazed how quick an hour goes. It's pretty funny. I guess I did too much talking, but thanks very much.
Thanks so much.
Yeah.
Thanks for joining, everyone.
Thanks, everyone. Yeah.